I've
that
never seen execution that bad ever.
It's
every
crazy.
single
But
time
he's
he
winning.
comes out, and he's like 3 or 4% above where the market's currently trading. It's absolutely
Hey
mental.
guys, welcome to the second episode of Open Interest. This is a very new podcast that we are starting where we are chatting about everything trading and data related. The guest on the podcast today is Anton and Chris from Glassnode. Glassnode is one of our key data providers for Faro, which is a trading application we are building for Hyperliquid. Glassnode pretty much powers everything that we have on the BTC side. They have the best data on Bitcoin. And yeah, today we're going to discuss all the cool metrics they track and how Bitcoin can be a lot easier than CT makes it out to be if you just have a look at what's happening on chain. Let's kick off with some quick intros so that the audience knows who the two legends that we have on the podcast today are. Anton, do you want to start?
Yeah, it's a great intro. Hi. So yeah, Anton Feingold. I head up the institutional business for Glassnode across APAC and Middle East and Europe as well. So what I do on a day-to-day is I help trading teams, trading funds, hedge funds, asset managers to utilize some of the unique data we have on Glassnode, bring it into their trading strategies. Lots of different types of strategies we're supporting, but this can be anything from, some OG whale who just wants to try and time the market well and predict kind of if we're in a bull or bear regime, that kind of thing, all the way through to higher frequency quant trading teams who are looking to, move positions on kind of like I'd say hourly basis, let's say. So we support them with our data and we basically help them apply it to their existing strategies. So that's kind of what I'm focused on day to day at Glassnode.
Very cool. And maybe just speak a bit about your background. So you worked at Deloitte, and then a bit of a weird thing in the middle. You did an electric bike retailer,
Yeah.
And then you ended up in crypto. Do you want to say a little bit about how you went from, being more on like the traditional side of things, and then you had this like entrepreneur stint in the middle, and then what brought you to Glassnodes, and specifically like Glassnodes is very crypto data heavy, which is like I think very different to the electric bike thing, and yeah, I'd be keen to understand what your journey to crypto was.
Yeah, of course. There may be a couple of things between electric bikes and crypto, but yeah, so I kind of had like a TradFi grounding, right? I think the first proper role I was in was an asset management middle office data company. So that was kind of like my grounding, my first role. That was all to do with funds, mutual funds, ETFs, that kind of thing. Working with TradFi powerhouses like Northern Trust and I don't know who else I can actually name. But yeah, like the tier one institutions at that firm. And then from there, I kind of, I moved more towards private equity. I was very interested in what private equity funds were doing. So I was doing value creation in private equity. Like basically the model is when they acquire a company, they look to improve that company so that they can sell it on for a larger amount. So I was doing that improvement piece at those companies. And I guess that kind of gave me that entrepreneurial mindset to go and do my crazy startup thing, which was the electric bikes. I kind of caught onto a bit of a trade in a bit of a trend in London around in and around the COVID period.
Yeah.
I think it was also maybe.
And you sold that, right?
I did, yeah. It was a bit of a reaction maybe to being at Deloitte, which is like a monster company. So I kind of wanted to have maybe something of my own rather than being part of this massive organization. So yeah, I went through that journey over like 18 months with that. And it was pretty cool. It was something different. And it kind of led me to join a startup afterwards, which I think really did put me on the crypto path. So I joined a startup, which is now called Desetti. It's been backed by, I was employee number 4, I think there, and it's been backed by NASDAQ Ventures exclusively. So it's basically a Web 2, not Web 3, SaaS company, but supporting fund allocators and institutional organizations, asset managers in their due diligence on funds. So I helped build that product. We were using AI to help the fund managers themselves respond to these information requests they get. And I think in doing that, I built up quite a large institutional network, which was obviously for a firm like Glassnode, which kind of grew from retail traders, right? And they're looking to expand, and they know that data is valuable to large institutions and asset managers. So they're looking for someone with that kind of understanding and network that I built up. So that, I think, in a roundabout way, gave me the natural transition. I think the last point on this is I'd been personally involved in crypto since about 2017, but I'd always kind of considered it a bit too volatile to actually work in as well. I kind of wanted to keep investing on the side, but not actually working in it until I'd seen it die 2 or 3 times over a few cycles, and I was like, this thing can't be killed. It's coming. It's here for good.
Yeah.
So that in the background was giving me the confidence to move into crypto. I built up the institutional network, and then kind of the right role aligned, and I got to join Glassnode.
Yeah, well, look where we are today. Now we have ETFs. That was like the pipe dream that everyone thought, the second we get Bitcoin ETFs, the entire world's going to be onboarded onto Bitcoin. We're going to be getting rid of gold and everyone's going to be using Bitcoin. And now we have the ETFs and we're not there yet, but I think the industry is doing a lot to move in the right direction. Okay, moving on to...
27.
Yeah. All right. Moving on to our second guest, Chris, also the Bitcoin whisperer. If you are reading any of the weekly reports from Glassnode's going into the dells of what's actually happening in Bitcoin, Chris is the brains behind that. Chris, do you want to give a quick intro on your background, where you came from, and then how you ended up where you are today at Glassnode?
Sure. Yeah. To call me the Bitcoin whisperer is definitely quite generous. Yeah. Our analyst team does quite a lot of work on that, and hopefully glad to see that the Bitcoin chain is still being appreciated. Yeah. So my background's more, I basically started out as a analyst at a hedge fund, was doing macro research for them, and then just was completely orange pilled and fell down the Bitcoin rabbit hole. Became obsessed and just basically wanted to move into the industry. I pitched the hedge fund on Bitcoin. They told me to get lost. So I was like, okay, I can't help myself. So I just basically joined any kind of crypto trading desk I could, and actually got lucky. And I was at BVNK. They were recently acquired by MasterCard. Incredible business. The guys have done really well there. So it was a great environment for me to learn and actually learn as much as I could about the industry. So they've evolved a bit more from what I'd call like cross-border payments for businesses operating in tricky jurisdictions to mainly just like they are just everything stable coins and payments now. They're just incredible. Yeah, so that was a great place for me to learn. Jumped across out of the payment space into another investment platform, trying to essentially also write research for retail clients, some institutional clients, and essentially also still focused on OTC brokerage at that point in time. And then, I took another jump across to a Swiss crypto hedge fund. And that was the last few years before joining Glassnode. So I got to work at one of the hedge funds that, Glassnode obviously services, and then actually make my way into the Glassnode hub, obviously where we're just really getting our hands dirty with as much data as we can, trying to produce world-class research. What the analyst team actually does at Glassnode is try to make as much sense of the data as we can, in terms of getting that across to some of the clients. Like every now and then, Anton and the other sales guys will essentially bring us in and try and explain some of these concepts across, how they're applicable, how you can use them to enrich all of their trading data sets, as well as obviously we get the opportunity to work with amazing funds and huge institutions to write big institutional reports. So that's where a lot of our time is spent, as well as obviously our weekly newsletters. So yeah.
Awesome. Love to hear it. Moving into the first question, how are institutions actually using Glassnodes today? And like maybe stepping back, I think what you guys have done with Bitcoin is incredible, because I feel like people take DeFi data and blockchain data in general for granted. DeFi Llama has done a lot of good work here, but I feel like it's almost very logical when you look at something like Ethereum. You can say, okay, how much USDC is in this smart contract? But if you break down Bitcoin, it is really just moving coins back and forth. So how do you guys take a network that is literally moving coins back and forth and turn it into useful data for institutions?
Yeah, maybe I should jump first on that from my perspective, and I'll pass to you, Chris. But I kind of describe the Glassnode data as data from an investor or a trader's lens. There's lots of different types of blockchain data you can have. Some people think that we do investigative data where we like track wallets and look for smart traders and all this kind of stuff. But we don't. What we're really doing is we're looking at the whole network, and we're trying to do cohort analysis on different groups to build kind of sustainable insights, which you can build strategies around or build your thinking around, which will stand the test of time. So all of our data looks at, I'd say, all our metrics are quite unique, and they look at things from a trader's angle, like what's the overall supply of overall profit or loss across the network? How does that break out by short or long-term holders or large or small wallet sizes, right? So we're just trying to do this segregated cohort analysis of different network participants, but we're looking at this from an investor's viewpoint. We're not really looking too much. There's a million different rabbit holes, I guess you could go down. So that's kind of the niche that we tend to focus on. And how are institutions using it? So really there's a lot of different types of institutions, right? We work with, let's say, an exchange, which is maybe just trying to put out good research using our data as content. but we might equally work with a hedge fund who is like crunching the data on a 10-minute basis, to take positions within the hour. So it really does depend on the institution itself. But I would say the broad buckets are institutions who are liquid trading and looking to implement the data in their strategies, various media or news or retail facing organizations who want to build a good picture of the market. And then I'd say apart from that, maybe asset managers who are doing a bit of both, right? They might be trading, but they might be kind of informing their internal research as well, like across all the different desks they might have. So yeah, it depends on the institution, but usually falls into those three buckets one way or another.
Makes sense. So you guys sort of service the entire spectrum of how they can consume the data, like one end being like very static report-based data. These firms probably take quite big positions, but not very often. Like, maybe they take a position going into the next bull cycle and then completely on the other end on like more of the high frequency side of things where they're more on the API side of the product. And maybe moving into the next question, which is talking about more about like what users actually get out of Glassnode. You guys do a ton of free content on like Twitter. The reports are free and they provide an incredible amount of value for free. So that's already incredible. What is paying? If a user comes up and signs up for Glassnode or a firm, what do they unlock? Like what's behind that paywall?
Yeah, I think like let's take the research part before the platform part, right? So we have our week on chain, which is like very widely viewed in the industry, which is awesome and has been, people's guide for a long time. We have Glassnode Research now as a service line, which is where you get the vectors, either a Bitcoin vector or a altcoin vector or both. And these are essentially, I would describe them as those research reports that we do in the week on chain, but kind of beefed up a lot and with direct positioning. So we try and describe the state of the market in week on chain. We use all the data available to us, but we will never actually give customers or clients or whatever it might be direct price targets and positioning. We'll stay away from that kind of thing. But with our research, we indicate different levels where you can position at. I think it still falls under the banner of not financial advice, right? But at the same time, there are positioning levels which you can or may not wish to use, but they're within those reports. So that's what the Glassnode research does. But then getting into Studio, so we have obviously a free version of our platform, which is used by hundreds of thousands of users, and they can access basic on-chain metrics on across actually lots of different assets, both price and also like core on-chain, some market data metrics. But they'll see that at quite a low resolution, and it will be a very small subset of our metrics, but it will be a useful indication and Glassnode verified data. But paying, it kind of unlocks everything we have. So all of the cohort analysis. And when we talk about the institutions and the data they use, it typically tends to be cohort breakdowns of our key metrics that they're using. So they're looking to isolate different groups of network participants to try and derive insights. So you get all the cohort analysis, you have download capability. So free is obviously read only. So you can actually act on the data because you can download it. You have all of the market data as well, the derivatives like liquidations, all of our dashboards, which are kind of our pre-supplied narratives or our framing and context to the data, our explanations. So that's all included as well. So yeah, there's probably a lot I could go on and talk about here, but I would say the ability to actually work, download and use the data, our full suite and our pre-built dashboards and templates and explainers of how to use the data.
Yeah, that makes a ton of sense. And that's exactly how we're using it. So Faro, we essentially are pulling in the data from Glassnodes. You guys also have like some of the biggest like API docs I've ever seen. Like we've been working with you guys, I think, for like 3 or 4 months now, and we're still going through it and trying to figure it out. But there's such a crazy amount of data, and yeah.
Yeah, I think like the catalog of 3,500 metrics, right? It's going to take a bit.
It's crazy. And it's even more crazy. Like I already said this, but it's like Bitcoin is literally like moving coins between parties, and you guys have constructed such an intricate, as you said, cohort analysis of all these different users, how they're interacting, which is just crazy. To me, something you said piqued my interest. So you guys essentially have this service where then you guys point to these key levels on Bitcoin. Maybe it's a question for Chris. What are the major metrics that you guys find yourself always coming back to pick out these levels? I'm guessing and it's like looking at where liquidations are happening in the market, what the levels are. But I'd love to understand, like, what are the metrics that you keep coming back to? And is there anything unexpected in there that you guys find yourself always coming back and looking at to determine what these levels are?
It changes quite a bit. Clearly, obviously, as somebody who follows markets all the time and is really passionate about just understanding markets and trying to learn as much as I can, you're looking at like various different metrics like this. Metrics I'm still discovering that Glassnode has. Our team are incredible at shipping new metrics too. So I can't actually keep up. Like we've recently just launched, I think, like accumulation trend score for certain look back periods. Such a sick visual. And that to me, and that's also like a really cool chart. But yeah, to get back to your actual question, I often try, I'm more of a like a top down kind of guy. So more bigger picture, rather actually establish the trend. Are we bull or bear first kind of thing? So like, your key cost base is like levels for me, like are short-term holders currently in profit or not? I quite like to look at that. So like short-term holder realized price. And generally, if short-term holders are generally like just barely in profit, okay, yeah, you've got a pretty strong uptrend. But as soon as you kind of lose that like cost basis level, okay, you're in at least a bearish regime, not to necessarily call it a bear market off the bat. Yeah, so that's definitely something we look at. Surprisingly, I find it best to try and get the full picture. So using what we call off-chain and on-chain metrics. I mean, at the end of the day, Glassnode's aim is to essentially be your one-stop shop for data. So not just on-chain. So yeah, like you say, liquidation data, open interest, and actually seeing, okay, funding rates. So you can get like the full picture of what's going on in futures. Okay, cool. That coupled with where we are in context of like a bullish or bearish phase, long-term holder on-chain positioning, are they accumulating or not? So it's quite a complicated answer, but at the end of the day, you kind of just have to get a very full picture using as much data as you can. And that's where I think Anton was alluding to our dashboards being quite useful for a lot of funds. When we've spoken to I can't obviously name clients, when I've spoken to a lot of these clients, one of their favorite things to do in terms of actual active positioning is to have their own kind of custom metrics all in one place that they get to look at. But yeah, in terms of what specific stuff, we often repeat ourselves in the week on chain. Some people find that annoying, but I find, and also our team finds it quite good to have updated points in time by which you're looking at the same stuff so you can actually inform, okay, this is what changed exactly after we made this observation. And as Anton's previously said, we shouldn't really be giving direct market advice, like non-financial advice. We try to be impartial, but we also do have to show people how to infer positioning based on the data. So non-financial advice, but this is what the data is saying is how we kind of like to do it. But yeah, so I focus a lot on the off-chain. So your futures data, ETFs, spot data, and then our lead analyst who's not on call today, he's an absolute whiz when it comes to like your true market mean, your realized price, everything like that to inform context of where we are in the broader cycle. Yeah,
that makes a ton of sense. And to go back to it, we're having a bit of a conversation before we started recording about the market flip-flopping about Bitcoin. Like you go back 2 or 3 weeks ago and literally I was like listening to a podcast. And then I also think like Taiki put out a video. He like made the big ETH short last year at the right time. And then now he's made his Bitcoin video saying like he's going long Bitcoin. And his reason is that Michael Saylor is going to pull us out of the bull market just by buying up all the Bitcoin. And it's interesting because maybe this is a question. How do you guys look at what Michael Saylor does as a cohort? Like, is he his own cohort, or how do you guys treat him? And then maybe extending from that, how are you guys looking at what the ETFs are doing? Like, what is an ETF? Is an ETF its own entity? And do you guys see future, how are you guys going to deal with that data in the future? As an ETF, I assume, is essentially one address, right? But in that one address, there's many other people. So I'm assuming you guys have a similar problem when it comes to centralized exchanges. But yeah, going back to my question, how are you guys dealing with like all these different entities?
A little bit of a complicated answer, but simply put, we do have to keep up with labeling of wallets and investigating which wallets correlate to which entities. So we do obviously track digital asset treasury company addresses, their data. The lens at which we look at them through is generally net accumulation or net distribution or net flows is the word I should probably use. So we do have 2 specific metrics: DAT net flows, ETF net flows, so that you can get a accumulation or distribution type of just the simple kind of binary: are they buying or selling? Because at least that from that lens you can infer what effect that should have on the market. So yeah, a lot of it comes down to our data science team actually being on it in terms of labeling the wallet movements. So sometimes we have to quickly jump onto X when there's like a metric that just seems like, oh wow, there's a new wallet that's just all of a sudden accumulated 1,000 Bitcoin. But meanwhile, it's just Coinbase or Marathon or somebody just doing a transfer of coins from a new to a new wallet. And so a lot of it comes down to just making sure that that wallets are correctly labeled so that the data still got its integrity.
Makes sense. So it's a very continual game.
Yeah,
I wanted to maybe add a little bit to that as well, just to say, like, so I think I did a panel end of last year where we talked about kind of the rise of the DATs, right, the digital asset treasury companies, where they were at that point. And I probably need to go back and double check this, but at that point, they were at about 6%. I think strategy was at about 6% of circulating supply in the territory where it's going to completely shift the market. I think at that time there was this narrative, which is that, the treasury companies are going to like eat the circulating supply and move the whole market every time they buy and all this stuff. But at that point, I think it was 6%. I'd be surprised if it was at the same level now. So we're really, at this point, we're not talking about monster mover. But obviously these things are growing and they could grow further. But I think for where we're at right now, I don't think that it changes the market dynamics in a long-term fashion when they buy.
Makes sense. And you said that the DATs don't move the market, but I always find it so funny when Michael Saylor just comes off and he has this huge buy of Bitcoin and he's like, the strategy has accumulated 1,000 Bitcoin at this price and the price is always like 10% above where the market is. And everyone's like, who is this guy buying from? He's getting like the worst fills ever.
I think
I've never seen execution that bad ever.
It's
every
crazy.
single
but
time
he's
he
winning.
comes out and he's like 3 or 4% above where the market's currently trading. It's absolutely mental. But I think just to finish off what Anton was saying, I think it also comes down to access to capital. So what kind of macro regime you're in, like easy money, hard money type of situation. If you're just using like binary terms, those guys obviously raising through all of the various creative vehicles that they are using financial alchemy to create. But at the end of the day, they need access to funds in order to actually keep on buying Bitcoin. And they need people to actually take up whether it's debt issuance or these preferred stocks, etc. So if money's harder to come by, okay, cool. They're not able to raise as much. Those buys aren't going to be as impactful in the market. So on the whole, if you have a hell of a lot of entities all actually doing the same thing, sure, that might move the market. Even now in these kind of like low liquidity regimes in the kind of like bear market we're in now, where its books are pretty thin, you can see when Saylor's accumulating just based off of like personally, you can see it in like a Coinbase premium, for example. If Coinbase spot's trading a little bit above the market, you're like, okay, it's more than likely Saylor accumulating. Is at least how I can infer that. And then as soon as he stops, we tend to sell off a little bit afterwards.
Go back, makes a ton of sense. Going into the weekly reports that you guys put out, I want to run through a couple of the metrics that you guys always keep coming back to, those being the true market mean, cost basis distribution, STH, SOPR, NUPL, and MVRV. So beyond those sounding like R2D2 models, what actually are these terms? Maybe let's run through some quick definitions, and then would love to understand how do these contribute to where you guys see the market today for Bitcoin.
Okay, cool. Yeah, so we often do reference those in the week on chain. I'll try and put them together. So NUPL, NUPL, as we call it, net unrealized profit or loss, and MVRV, market value to realized value. I kind of bucket those into a similar category.
Yep.
Net unrealized profit and loss, you can obviously see when people are sitting on unrealized gains or massive unrealized losses. So kind of like pain points and points at which the market are like, is super exuberant, so overvalued, undervalued sort of metric. You can see, okay,
Makes
if
sense.
a hell of a lot of people are in profit, you should be a little bit defensive, and obviously vice versa. Same goes for MVRV. A lot of people, it's probably one of the most spoken about metrics on Twitter, even though people don't really understand what it means. What really moves it is price velocity, market value to realized value, people, the rate at which people are, the rate at which price is moving compared to the rate at which people are able to realize a profit. So if like we've had this entire market cycle, the price was pretty much grinding up and to the right. It wasn't very fast like it was in 2020 or 2017, where the market was just roaring and people actually couldn't hit the sell button and take profit fast enough. What you could see throughout the cycle is that a lot of people were like a lot of whales. People often forget how many coins whales actually do have. They got deep pockets. So they sold far more coins than most people could even fathom. So that actually ended up keeping MVRV relatively low. It didn't get to the kind of crazy levels most people were expecting. So a lot of guys kind of missed the boat on trying to sell or at least take profits this cycle. Yeah, and if I go back to true market mean, that's quite a nice one to use. Well, I can't take any credit for that. That's actually our previous analyst as well as our lead analyst at the moment. He uses that quite a lot as a more accurate market mean. So true market means more your active participants. So it essentially excludes lost coins or very old supply that hasn't moved in a very long time. So view that as like in your average cost basis of most of the active participants in the market. So currently obviously below true market mean, but above realized price. Realized price is essentially the average cost basis of every single coin in existence. So if you basically sandwich between those, you more than likely defined by that range. At least that's my personal take. But realized price in prior cycles, every bear market up until this point, you can't say the same going forward. Every bear market, we've gone below realized price. And that tends to be a very good point to which you can accumulate some Bitcoin. So not financial advice, but personally, I'll be buying some Bitcoin if we break below realized price, because that's just deep value territory. And yeah, have I missed any? SOPR, spent output profit ratio. So the amount of coins that are obviously being sold or spent, are they in a profit or a loss? So you can obviously infer based on that. So if your short-term holders are selling in a profit, not to be a dick to anyone, but short-term holders generally are very bad at their timing in terms of their trades and accumulation. So they generally tend to, they're good counter indicators. So if short-term holders are in serious profits, you should be defensive because your short-term holder generally isn't the most informed cohort of investor. Cost basis distribution, yeah, we can spot zones of accumulation. So based on certain on-chain activity, we can see at what price and over what time certain cohorts are obviously accumulating quite heavily. So it generally can be used as like a support kind of a level, or a level that might be defended by entities that have recently accumulated over, let's say, the last 30 days. And if you can see that a certain level, let's say 68K, there might be some sort of level that was accumulated there. Most guys use it as like a inferred support or resistance level. It generally does tend to act that way, but it depends on how heavy the market is. If the market's super heavy and it's not a very dense cluster of coins that have been accumulated there, you'll probably just end up going straight through it. Yeah. So there's a lot of metrics we tend to repeat ourselves using in the week on chain, just because they are quite direct in terms of how you can infer using them for the market.
Makes sense. And in your opinion, where do you guys think the market is today? At least last I checked, I think we're like slightly hovering above that point where the entire market is slightly in profit right now. That may have changed because Bitcoin, I think, is down like 10% over the past 2 weeks. So maybe that's changed. But yeah, what are your thoughts on where we are right now?
Personally, I'll say a bit here, and then I'll let Anton jump in as well, give his kind of take. But we're in a bit of a no man's land. Personally, I defined my kind of bear market level a while back. Sort of losing a few months ago was kind of where I was like, okay, now we're definitely in a very defensive regime. So we're definitely in a bear market, at least in my view. But where we're sitting currently, we're just in a range, as simple as that, stuck between 70 and 60. Yeah, we've popped above 70 a handful of times, but the market's just basically sitting here. And the real question for me is if this range will play out like the previous one, where you range for a few months and then eventually you just the floor falls out and you maybe head lower. Personally, I do think throughout the next, let's say 3 to 6 months, if you do end up losing the floor and going down to realized price, like I said previously, I think you'll end up getting a lot of accumulators down there, and a lot of heavy hitters will probably start buying there because that is deep value and a very similar kind of pattern to what's played out in previous bear markets. So personally, definitely a bear market, maybe towards the later phases of the bear market. But yeah, it's a bit of a tricky spot at the moment. When you're in a range, you don't really want to diddle in the middle. So just kind of wait until either side breaks and then act there. I'm more of an if-then kind of guy rather than just trying to take a punt in the middle. What's your take, Anton?
Yeah, I mean, largely agree, to be honest. That I think like the main thing for me is we are very clearly range bound. And I think like the word is like chopsolidation, right? Chopping around, but consolidating. So in and around this range, somewhere between 60 and I'd say like 73, right? Or something like that. And I think the important thing is like, if you've got your directional hat on, to maybe not get too excited with, 5% move to the upside and let various opinions sway you that the situation is something that it's not. because we don't see the same level of activity on chain. We don't see the same level of open interest in the derivatives market as well. It's just, we're not there. Like the flows, if you look at the capital coming in, institutional capital, they're like, this year they've been largely contracting. I think March was slightly up versus Jan and Feb, but it hasn't been what it's been previously. So I think the key point is to maybe just not get too caught up in a 5 or even like a 10% move upside or downside. As long as we're staying in that range, nothing has really changed. And it's like Chris said, really, we wait for those levels to break, or for some signs or signals across on-chain, off-chain, macro, as to what might be a catalyst to move us out of this range, either to the upside or downside.
Yeah, that makes a ton of sense. And I think we saw this, like Bitcoin had this brief stint over the past 2 weeks where it pumped. I think a lot of what was driving that narrative was Sailor and STRC and people being like, hey, this is a new Ponzi to come and buy Bitcoin. And then it was like looking at like the 8Ks, he bought like 3K and then 18K and then 22K Bitcoin. And then now we're back down to 1K. And I always find that the market will move up like 5%. And then Sailor will announce something and everyone's like, there's more buying coming. But I often find that by the time that move has happened, Sailor's already finished. And there's only so much capital he can deploy. There's only so much capital that's willing to take the risk of something like STRC. And like that for me is like looking over the next couple of weeks, I think we'll find Bitcoin will most likely go lower because people had this hope in STRC that it was going to be this buyer. And I think it's already slowing down. Like we went from 22,000 down to 1,000. That's already a crazy drop in buying. But I feel like the market just loves to rally behind Sailor. Moving on to another metric that you guys had in the most recent report. You guys were chatting about spot CVD. What is spot CVD and why does it matter? And how can users be using this to gain insights from the market?
Yeah, simply put, CVD, cumulative volume delta. So essentially just a aggregation of the last few days worth of volume, and obviously the difference it's actually made to volume, whether it's a negative or positive increase in volume, and you can infer that out to whether it's a line or bars, etc., to inform your trading. So simply put, CVD is another way of looking at like RSI, for example, the relative kind of momentum of the market. So over the last few days, has volume increased or decreased? So we're not seeing too much volume at the moment. Things are pretty dry. Spot volume's not really doing too much. I think generally volume is very important for sustainable moves. Spot volume is very, very important. Otherwise, you end up having these kind of short-lived moves like we saw recently. Yeah. So if you see, nice positive changes in CVD, and it's followed up by meaningful increases in spot volume, that's something that you at least most people will be able to deduce what should happen there. But it's more just sustained increases in volume that tend to move price rather than just these ping pong type of moves in CBD. But yeah, I think I feel like the move recently was more just shorts getting caught offside, and then a little bit of spot volume increase from Sailor just accumulating with some freshly acquired capital. I think that was essentially all it was going to be.
How do you then use spot CVD against something like price? Because you mentioned that, okay, what we're looking for is essentially spot CVD to be trending higher. Is there a caveat there where spot CVD trending higher while price is trending higher, or is it more bullish if spot CVD is trending higher while price remains stagnant? How does where price is going with spot CVD influence what it means as a metric?
I think that comes down to a little bit more granular, where it's like what type of trader you are at the end of the day. If you're a momentum trader, you're going to want to basically wait for price, CVD, and spot volume to all be in sync, if that makes sense. Most momentum traders will kind of wait for quite a lot of confirmation before they jump in. But if you actually are trying to get in before the actual reversal occurs or try and pick bottoms, you'll obviously try and spot like as soon as CBD actually starts to kick up a little bit before price actually does find a bottom, and try and go and perfectly time those lows. So yeah, I think that's more a question for the trader rather than somebody who's just trying to get you to access data.
Makes sense. And in your guys' opinion, okay, so we're range bound right now. What does the data say on where the floor is? If we drop out of this range, where's the next range?
Well, there's no real floor at the end of the day. Price can go to zero. It's possible, but most people will argue and say, no, I'd buy all the Bitcoin at $1 if it got there, kind of thing. So, I think realized price is not a floor, but at least a point at which a lot of people will step in the market. I just keep on parroting about realized price on this podcast, but I think it's a very important level. So that's currently at 54K. I think 54K will be defended by quite a lot of people. I think a lot of people will step in and acquire down there, well below old cycle all-time high. So for example, 2022 bear market, old all-time high was roughly 20K or just shy of 20K. And as soon as we crashed through that and got down to realized price, I think at that point we broke below realized price, and K was defended quite heavily. So let's say it plays out very similarly to that. I think 54K will be defended, or just below 54K will be defended. Yeah, personally.
Makes sense. Anton, any thoughts from your end?
No, I think I think it's going to take, you kind of have to, like Chris said before, kind of reassess when we get to that level, what's going on with macro when we get to that realized price. Like, I wouldn't treat everything as a red line in the sand. Like, Glassnode Analyst says bear market floor is 54K. But we have to see what happens. Like, what is the context when we're there? What's going on? What's the activity like at that point? We look at levels, which are important, right? And we look at cost basis levels across the network, where have people accumulated. That's like a predictor of what they might do based on levels of profit loss, or even reaching break even, or what it might be. But at the end of the day, these are only levels. They're not they're not price targets. I think just important distinction.
Yeah, that makes sense. And do you guys find that these people that tend to buy at these levels, from how I see it, it's not really going to be the ETFs, as I feel like retail is always the last one. And who is actually buying at these levels? Is it Bitcoin whales who cycled out of the last top and then now are rebuying back to ride the wave up? Or do you guys have many insights into who's actually stepping in at this level, or who do you think is stepping in?
Yeah, I think it's going to be the longer term investor who buys at this price. I think that's just the longer term or more sophisticated investor is going to be the kind of investor profile who'll buy here. I think maybe Chris, you may have data somewhere to back that up, but if you look at asset managers who've maybe undertaken like Morgan Stanley, I think we just released a new ETF, right? They're doing that with the price having dropped 50% off a cliff. So these large asset managers and institutions, they're embarking on multi-year programs to assets, right? In some form or another. With the regulatory clarity in the US, that's freed them up to offer these products, build these services. So they are probably quite aware that Bitcoin's volatile and can drop to that kind of that percent drawdown.
Yep.
So I think what you're going to see is that kind of institutional buyer at this point, probably not as enthusiastic a buyer as if the price was higher still, but they'll still be buying because they've built programs around this that are multi-year, and service lines and offerings. So they kind of need to, they're committed to that. And then on the moving away from maybe like an asset management institution, looking at kind of network participants, I think you'd expect a longer term holder to be purchasing at these prices, and just generally as a profile.
Yep. That makes a ton of sense.
So I can add a little bit more context. I even just pulled up some of our data here at the moment. So long-term holder cost basis distribution, just to add some more context for that question of where the floor is. There's various different clusters as we go all the way down, where long-term holders do hold significant amounts of coins, and they're more than likely going to go and either reaccumulate in that area or go and defend that. So here there's a very heavy cluster that sits at 38 to 40K, and maybe that doesn't even hold. So you can't really tell exactly where the bottom is. You can just identify certain areas that there's significant supply concentrated there. So obviously you can't just go and make a mass call, but yeah, that's currently where the levels sit in terms of where people might find some sort of floor. But as for accumulation, there's not much accumulation going on at the minute. If we're looking at various different cohorts, various different size cohorts, there's actually just a lot of your smaller wallets. So let's just say wallets with less than 10 BTC are all actually net distribution. Like they're all just pretty much panic selling at the moment, or just getting tough and tired of the range and selling their bags and saying, I'd rather sit this out. So most of the cohorts that we track are net distribution, or at least selling to a certain extent, but there's not very strong accumulation popping up anywhere, at least on our side.
Very interesting. And maybe for the audience, when you say that it's heavy at a level, what do you guys actually mean by it's heavy at a specific level? Like from the data perspective, what does that look like?
Are you asking for like specific numbers, or just to clarify?
I just mean like on the data side for you guys, how do you guys determine a specific level is like heavy?
For example, that level I just referenced, there's over 600,000 Bitcoin that was accumulated in that range. So that's what I'm saying. So essentially, that's pretty heavy when you start to factor in how many. Go and look at MicroStrategy's holdings. This is more than that. Yeah. So it's a significant amount of Bitcoin that's obviously being accumulated at that range. So that's what we mean when we say heavy. So if we say there's a thick cluster or a heavy cluster sitting above price, you can infer that that's more than likely going to act as some sort of resistance, as some guys either they'll go and just sell at at break even, for example. How to infer with the cost basis distribution, it's a very nice looking chart, but at the end of the day, you got to make sense of it. So if there's a heavy cluster sitting above you, that means it's a lot of guys that accumulated above price. They're sitting at a loss. If price basically goes back to where they accumulated, some of them are going to say, cool, I get to, wash my hands and I'm not going to experience any more losses.
Yeah.
So a lot of them will either sell break even or they'll sell just at like a very small loss. But
makes sense.
If you've bought a massive bag at 38K yourself and price got there again, you'd be like, I get to go and buy here again. You might go and obviously pick up some more coins. Not obviously guaranteed, but that's just how you got to think of the psychology of what those levels really mean.
Makes sense. And how you guys define that is essentially someone went out and bought all of that Bitcoin and it's moved to that an address, and then it hasn't moved out of that address.
Has not been spent. Yes. So that specific UTXO, that specific BTC that they accumulated has not moved, has not been spent. And obviously based on the timestamp at which that transaction occurred, at which that Bitcoin was acquired, you can obviously go and infer what price was at that point in time.
And just to add to that, so Glassnode kind of, I think, pioneered originally entity clustering. So what that means is identifying which wallets are the same ultimate owner behind them. In crypto, we all have loads and loads of wallets, right? Multiple wallets, right? But if I send from, let's say, talking about centralized exchanges, I send my Bitcoin from OKX to Binance or whatever it might be. I haven't spent that, right? I've just moved it. I've reshuffled it. So, we have, I'm pretty sure, the market leading heuristics to track the entity clustering. So we're tracking what transaction was a wash trade versus what is just an actual distribution.
Yeah, it's crazy to think about the amount of work you guys have put in to making all of this work together. It's incredible. And maybe moving on to finishing this up with a last question. Before we started recording this, you guys talked about Glassnode's expanding into a couple of other macro stuff, macro pieces of data. Do you guys want to chat a bit about what you guys are building there and what users can expect?
I'll talk kind of high level, and then Chris, maybe you can talk about the various macro indicators in more depth. I think taking a step back, Glassnode started out in 2008, start of 2018, and has been, I'd say, relatively well known or famous for the on-chain metrics. Right? We have the deepest catalog of on-chain. We're covering massive amount of networks now. I don't think there's anything which matches that, but we were very much known for on-chain analysis. With the rise of the derivatives market, the prominence of ETFs, with DATs, all of this, it's become critical, I think, to view the market from more than just the on-chain lens if you want to accurately understand the market. So from about 2022, we've been ramping up off-chain metrics. So that's the derivatives market coverage, that's tracking the ETFs, which we started to do. That's the DATs as well, tracking those balances and flows. And then most recently, that's also taking into account macro indicators as well. So overall, we've just been trying to help traders build the best picture of the market they can. And to do that, we've had to look beyond on-chain because the market has matured and evolved. So that's kind of led us to here. And maybe, Chris, if you want to talk about some of the exact recent additions in macro or even actually option side as well. We've added so much lately, which I don't think many people are aware of. So
sure. Yeah. The market's massively changed. The one point I was actually to bring up a little earlier was around the address labeling. People used to be able to not necessarily trade Bitcoin, but inform their decisions based on active address counts. So as soon as active addresses were going up, you saw participation going up. You could get involved. You could buy some Bitcoin, and you could basically be profitable with that. In the early days, that could have been your trading data. It's just participation going up. But now with ETFs, like you said, a hell of a lot of investors who would have had to obviously go and self-custody those assets now can just custody them through the ETF. Obviously, there's a specific wallet for all of those different holders. And how do you know how many holders are part of that? So active address has kind of lost a bit of its usability from that lens. So that's why we're obviously expanding as much as we can to give as much, as much context and various different ways to look at this. So like the macro data we've added recently, money supply, central bank balance sheets. We've got various different inflation metrics. So US core, Euro core, even we've got US and Euro debt to GDP. Geez, it's actually quite crazy what these guys have managed to add. Shout out to our data science team and all the guys for shipping so much recently. This is insane. And as I said, we've got indices, bonds, commodities. No, it really is impressive what the guys have managed to put out. And on our options side, these guys have added actually way too much. I haven't actually covered a lot of this. Max pain points, exposure, gamma exposure heat maps. I personally quite like gamma exposure, just so that you can obviously go and see dealer positioning and where guys are sitting. That can also actually be used relatively, not easily, but you can actually use that in tandem with like cost basis levels, for example. So a lot of this data actually does end up intertwining. And you can build quite a nice full picture of what the market's looking like and using all this. And yeah, I think the beauty of this is I'm not as clued up on this side of things. I know Anton really is in terms of our new MCP server, our integration with Snowflake. So I think I'll probably hand over to him for this, just throwing him under the bus here. But we've had a lot of positive feedback in terms of having all of this new data being able to be in the same kind of place for our end users and the hedge funds and clients at the end of the day. I'm sure you've been receiving a hell of a lot of compliments there, Anton, if you just want to touch on that.
Yeah, maybe not to me directly, but the offering, yeah, for sure. And yeah, just an extra point as well, maybe. So the gamma exposure metric, which we added recently, across our institutional clients, our pro tier clients, that was the fastest growing metric in terms of usage. So that is the quickest growing metric on Glassnode for trading institutions, which is pretty cool, I think, and especially for a recently released metric. Not many people are aware of it, so it's actually kind of almost going viral as a metric to be used. So that's pretty cool.
Very, very cool.
Did you want to get on to like the different ways of consuming the data? Was that kind of what's coming next?
Yeah. I'd love to dive in deeper into how institutions are consuming the data. We touched on Snowflake, and then also would love to chat about the MCP stuff as well.
Yeah, of course. Okay. So there really are like there's quite a few ways to get into the data these days. It's only like a few years ago that we added the API, I think. So it's coming quite fast in a relatively short period of time. I think the best way to talk about this is probably splitting up the different types of traders, right? So I would like broadly categorize them into directional traders and market neutral traders. I would kind of like talk about the different trading strategies like that. Directional is pretty much most of what we've talked about today, where you're trying to take a bet on the direction of the market. We've talked about the different price levels. We've talked about activity, participation, and in the network, and all of these different things, which are basically leading us to a decision, be it long or short term, on the direction of the market. So that would be a directional strategy. There's lots of different subtypes of that strategy, but what they have in common is that you're taking a view on which way the market will go. Then we have market neutral strategy, which is kind of the flip side to this, which is employed by lots of institutions. They all want this to some degree because it's kind of uncorrelated exposure to crypto assets, right? Where there's lots of volatility, but they don't necessarily always want to try and call the right side of the direction. They want exposure, but in a way where it's not dependent on calling the right direction of the market. So what are those strategies? Like if you're probably familiar with popular ones such as like exchange arbitrage, right? It doesn't matter which way the market's going. If you can find a better price on one exchange versus another, you can arbitrage that. Or there's yield arbitrage strategies, or there's statistical arbitrage strategies, which is something that Glassnode users can definitely employ with the data we have. So I'd kind of like flip things into that, right? If you think about a trader who's directional, it's kind of most traders who are not like a sophisticated trading fund. They're trying to get an informed view on the market. They're looking at our charts, which actually put things into context for them. So that's very handy because they're kind of eyeballing these various mechanics to build a decision. So looking at the platform will be useful to them, but also where the MCP comes in is quite important for them as well. The MCP is a direct connection to the LLM. So if you're talking to ChatGPT or whoever it is, you might want to ask a question like, based on this data, what do you think is going to be the next move in the market? You like to really dumb it down like that. That's what you might ask. And you might then download the data set and then upload that file into ChatGPT or whatever. With the MCP, you have a direct integration with your LLM to the Glassnode data. So the agent itself is calling our API on your behalf. So you can then start to ask questions like, what are the most important metrics for me to be aware of based on your understanding of the Glassnode data set? Or any other data set, right? But so it kind of flips the script, and the LLM or the agent is then sort of dissecting the data on your behalf. It's doing that analytics layer, and then you can start to ask it more effective questions like, where should I position based on X, Y, Z that you understand? So it's that direct connection between the LLM and the trader. I'd say that's mainly most useful for a directional trader who is looking to understand the market, because it can crunch vast volumes of data almost instantly. So that's why that's particularly important on that front, and it suits the directional trader. The API, I'd say, suits both equally. It's basically for those who want to consume large amounts of data, but they want to trade the market algorithmically. So they need to have the data offline in a way that they can backtest the strategy. They can say, for example, like, I want to see the impact on price when net unrealized profit or loss is positive, right? When the market is generally in profit, like, what does that mean for the price when the market's in profit, just broadly, or like above, like, let's say 30% in profit? What does that mean, and what should my behavior be? So to do that, it's obviously great to have instant access to the latest update of the net unrealized profit and loss metric. So the quickest way to do that is, and imagine you're doing that with, like, let's say 10 metrics. The quickest way to do that is obviously to have an API connection. Then if we go like all the way to the other end of the spectrum, away from like the individual directional trader who's just trying to make sense of which way the market's going, to a sophisticated, let's say 100-person quant trading hedge fund, and they're employing multiple different strategies, right? Some are directional, some are market neutral. They might be doing a lot of market making and trying to take a percent off the trading activity. They might be doing something that I think a good one to explain this is maybe statistical arbitrage, where they look at as much data as possible across as many assets as possible, and they look for some kind of arbitrage or some kind of value point, which maybe people are missing in some small metric about an asset, right? So to do that, what their objective is to get as much data as possible, as much up-to-date data as possible. So that's where something like the Snowflake would come in, because it's rather than calling an API, you just instantly get all the data ported into your data warehouse. So if your objective is to get as much data as possible and make sense of it as fast as possible, then you need something like the Snowflake level delivery, where you can just directly receive that data. There's no calling APIs. There's no waiting for refreshes and all of this stuff and looking through the different metrics. You just have access to the data instantly, and then you can start to...
That makes a ton of sense. And do you guys see the market going more and more towards Snowflake? Like I feel like the MCP is like step one, but like with the way that LLMs are going and the amount of data that they're able to consume, is that why you guys went down this route of like, integrating with Snowflake? Because ultimately we may not be looking at charts in a couple of years. It'll be some LLM or some agent that's crunching all of the data and then creating the charts for the user and going back to them and saying, hey, here's what I think, or even a step beyond that, just doing it for them automatically once it understands their intentions, their risk preferences. Is that sort of where you guys see things panning out eventually?
That's definitely been the direction of travel, I'd say. So I mentioned that I've been at Glassnode where we'd only just recently implemented actually having API access, right? So I've kind of seen this transition, I'd say, with even a directional trader, right? Somebody who's just using the data to make sense of, are we in a bull or bear market? Are we in like a local top or bottom? Are we in like a Bitcoin driven regime, or is it alt season? Like, someone just trying to answer these core questions. They previously would have just eyeballed our charts. They would have used the charts and that would have been it. What I've seen is that these guys are all looking to employ the LLM or some sort of model to understand this now. So AI has been, within the past 3 years, become incredibly accessible for everybody and incredibly usable for everyone. So I think that your everyday directional trader is now looking at things from potentially more of like an algorithmic perspective as well, or like rules-based perspective, which kind of lends to algorithmic. And then, I think that's also happening at the other end. So guys who are quant trading are now looking to do even more, go further down that path, not like quant plus fundamental, but purely quant, therefore need as much data as possible, as fast as possible for whatever agent is helping them. So yeah, it's definitely the direction of travel that I've noticed. Are we there yet where everybody only needs access to Snowflake? No, probably not. But it does seem like everybody could probably benefit from having the API connection at least. And then I guess the next step in that journey is Snowflake.
That makes a ton of sense. And maybe to wrap it up, we mentioned you guys were adding all these macro indicators, self-tracking ETFs, like with the way that on-chain capital markets are going. Is that where you guys see Glassnodes in 5 to 10 years, essentially doing what you guys have done for Bitcoin, but to every single asset? Because I think that would be insane, right? Like you guys have done so much for Bitcoin, but imagine if everything on the NASDAQ was trading on-chain, then you guys could do the exact same thing for everything that trades on the NASDAQ or on the CME. Is that where you guys want to see Glassnodes in 5 to 10 years?
I think like that it's a big question. I think that Glassnode is about decoding what's on chain. So if capital markets are on chain and we can derive these kind of insights, I think it makes sense that we would go do that. But right now, I don't think there's not the level of participation or liquidity in on-chain capital markets where you can like necessarily derive the kind of insights with that level of accuracy. So I don't think we're quite there yet on things like tokenized equities, that kind of thing. But if they get to the point, and I'm a believer in blockchain technology, I do believe that at some point these things will be on chain. If they get to that point where there is the liquidity, the participation, where we can actually derive meaningful insights about the security itself from the on-chain indicators that we're used to creating, I think it would be a natural step for us to go do that.
Love it.
100%. 100%.
Not trying to populate our product team's roadmap.
Yeah.
I'm sure they're seething right now.
Yeah. Just speaking ethically, of course.
They're going to kill us. No, but I think this was something I was actually quite passionate about when I joined Glassnode. It was actually a big reason. Before I joined, I was quite keen on this whole trend. I think you're 100% right, Anton, and we're not even remotely close to getting there. There are people experimenting with like tokenized bond auctions, etc. And can you imagine if you could actually see exact holder movements and everyone actually with treasuries, you know what I mean? Like if the more important and big and meaningful the assets get that are on chain, that we can infer the same kind of data that we have from Bitcoin. Geez, I think that is an incredibly powerful data set that you'd have. So yeah, we're very well positioned for this trend. If everything does come on chain, we are leaders in the space in terms of understanding on-chain data. So yeah, I think that's a very exciting trend personally. And I've been trying to keep up with that and actually try and push us in that direction to a certain degree without pissing off our product team.
Love it. Well, cheers guys. It's been awesome chatting. Appreciate you guys bearing with all of my questions. Yeah, really looking forward to what you guys are going to be putting out over the next years at Glassnodes.
Awesome. Yeah, thanks so much. It's been great to kind of get into the detail of some of these concepts. We don't normally get to do that on a podcast like this. So it's very cool to get this level of question and hopefully make some of the acronyms make a bit more sense for the audience.
Awesome.
Yeah, it was really fun. But thank you so much for having us on here, man. Yeah. And hopefully this conversation was actually quite useful for a lot of guys in terms of understanding Glassnode. So yeah, thanks for having us on.
Awesome.